Hi everyone. Let's have a great week. Hello, Sinatra and Ryan. How you doing? Richard,
Good.
Alex,
Morning, Dale.
Alexander, doing pretty good.
Good weekend?
Can't kill the dollar, Ryan.
No, well, it's been killed, isn't it?
Yeah. So even the pound looks heavy to me
Bit of a yen
up
story
here.
today.
Okay. You want to? Let me just say one thing about this on the VIX,
Yeah.
guys. You know the way it closed Friday. The VIX. It was like there was no fear. There was no fear. So in fact, the question would be, I was going to ask, hi, Gorshi and Hugo and everyone here. Um, with the VIX not doing much with the major sell-off, a lot of damage, technical damage done. The way it closed Friday, you could have said, well, there's no fear, so maybe the market's okay. But you could also have looked at it, the fact that there's no fear meant that there was more left to get people to capitulate. And that looks like that's going on right now, with the S&Ps down 32. I mean, it continues. The only thing I could say about this is, I'd be careful being short down here. Starting to get some, a little bit of divergence here on shorter term TFs. Almost looks a little bit like a, three drive, but the Nasdaq's a weak sister, so you even have more glaring divergence in the S&Ps. And the only other surprise, and finally it happened here, and Aussie turned lower from 72, so, you look at the daily, it still looks negative. And the dollar looks like, looked like it was going to break down. And here we are putting in a good day. So maybe this is going to be the week we finally push. And okay, so now, that the yen is taking out 1550, Ryan.
Yeah.
So the story on the yen, go ahead, buddy.
Yeah. So we got some minor support coming in around this 2025 area. Then it's 115, 114.90. The big level's 114.50, which is that multi-year high area. But it's yen being bid across the board here, and it's dragging down the majors. You might expect euro dollar to be up, but it's sagging. Dollar CAD's up a bit just now, and so dollar Swiss. But again, I think it's more yen doing the dragging on the other side of it rather than the dollar side. So I'm not sure why we're seeing this sort of risk off period. I mean, is it more fallout from Friday? Have we seen the top of Fed expectations and that sort of thing? We had yields touching 10-year yields touching 1.8% earlier. You'd have thought we'd have a better picture this morning, a better risk mood this morning, but no.
So maybe we're going to have a little pause and it pulls back to like 165 or something like that.
Down to 170 maybe. Yeah. Something like that.
So, and the yen is maybe finally responding a little bit to risk off. I mean, we've shed quite a few handles, 100 and 200 handles in the S&Ps in a week.
Yeah.
So, that could be it. And everyone started talking, Ryan, that, there was no flight to quality in the bonds with the market selling off. There was really nowhere to hide. So, bonds are a bit overdone here. TLT as a proxy back down here at major support. So maybe we're going to get a bounce in where yields come in a little bit. And that may be part of the reason. Metals still, can't really get going. They were trying to hold, but I still think there's some new lows left in here. That's a weird looking chart.
It's sort of looking like a flight to cash, isn't it? When you see all the assets on negatives, you think, well, where's the money going? Everyone's selling it and not buying anything. Where's it going?
Yeah, and it looks like the dollar.
Yeah, well, so it's not
for now.
It's not clear. Yeah, it's not clear where it's going in the dollar.
Yeah, that's true. That's true. Higher low here so far from last week. So, we've been moving sideways here in the dollar since when? And this is not that was not the first attempt up there. So really, pretty tight range in the dollar going back to Thanksgiving.
Yeah.
So, it looked like, I mean, Friday's closure looked like it was going to resolve or at least correct to the downside, and it just doesn't. So, I'm thinking that's going to finally, head up towards that 97.5, 98, maybe this week or next week, or at least by the end of the month. So that's the way that looks.
But to see that, you got to get a fairly decent move in euro dollar, haven't you? Because obviously that's the bulk of the Dixie. Unless we get under 1300, bust that 1270 mark, it's going to be hard to see the Dixie moving up that high. Don't you think?
Well, I mean, euro never responded compared to cable, so it's kind of been stuck in the mud, as Blake has said. I mean, the best it could do was move sideways to relieve the oversold condition. Maybe we finally get this flush towards 111, 110. And I know I'll be looking for reasons to short the dollar then, even though everyone's looking for that. So
I think
morning, guys.
Hey, Stel, what's happening? What do you think?
No, let's Ryan finish, and I'll add.
Yeah, sorry, just
problem.
quickly. I think it's getting close to the point where I'm going to start layering in some buy and sell stops in euro dollar. Either side of 114 and this 112. 113, 112.70 level, because it's holding tight, and if we get a move above either side or out of either side, then we should get a decent move from that. So yeah, maybe some buy and sell stops on the tops and bottoms.
Also, the oil stocks have been the saving grace for the market. One of the sectors holding up, along with banks, with yields. And if this is a failing rally in oil, that's not going to do much for the cause to stabilize the market either.
True.
So we'll see.
Sorry, didn't mean to interrupt you before Dale and Ryan.
No worries, mate. Good morning.
You never do.
Yeah,
you get a pass.
I'm not Steve, right? Anyway, I just wanted to add that we're getting more and more hawkish in terms of the Fed, and today Barkin was out saying on the wire saying, "Oh yeah, it's very conceivable that we're going to raise rates in March, and we're going to be doing QT, quantitative tightening." Now that's something I really want to see how that pans out, because if they're not buying bonds, they're assuming that somebody else has to buy all the bonds they need to issue on an annual basis, which is over $1 trillion to fund the deficit. So that's going to be interesting. But anyway, what we have here today is the fact that markets are now pricing pretty much a rate hike in March. I think last time I checked, it was something like 90%, and 3 to 4 hikes this year. And the Goldman came out today saying, yes, they're going to be hiking 4 times this year, and quantitative tightening is going to be brought back to something like starting in July or something like that. So we've come a long way within a few months, right? We've gone from pricing very little to pricing all this, and the Fed seemed to be very anxious to get started and to get as much as they can done, because they know that they're going to need to unwind that at some point. So the question now remains, how will the markets react? And by markets, really, we mean the equity markets. And they're starting to get a little bit nervous, because the punch bowl is going to be taken away from them. And now, I'm going to reiterate what I said last week, and that is, when I see the market pricing way too much, way too quickly, and yes, of course, there could be a chance that they might do more than what the market's pricing. Of course, nothing is 0% chance, but I think that at the moment, the risk is really weighed on being basically what I want to be doing is I want to be short the dollar. Not exactly yet, but I really feel uncomfortable when so much is priced in, and it is a hurdle, to get to what the market's pricing. So that's my humble opinion. I want to be shorting the dollar, and which way do you short the dollar? That's a very good question. Against what? My favorite one remains to be long metals. And I know that in a crash, a market crash, if it happens, they're going to take some beating as well, like they did in COVID in 2020. But I think gold and silver specifically are very undervalued. They have great potential, but I'm not pulling the trigger yet. The other thing I'm looking at is cryptos, and Bitcoin is starting to flirt with the 40K support, and if that goes, man, I think we're going to get really close to 30K afterwards. So that's a very, very important level to watch, and you can bet that a lot of people are watching it, and there are quite a few stops below. And the other thing, I know I talk a lot, but I have to say this as well. The other thing we have to remember with cryptos is now we have a lot of institutional interest. It's not just some wacko sitting at home hodling the Bitcoin. So this is institutional interest. So they're going to be looking at technical levels. They're going to be looking at where do we cut our losses, where do we go short. So I think if we do break the support, it's going to be quite different to other times when we broke an important support. It's getting institutional interest brings good and bad things with it. It brings good volume, so there's a lot of volume on the upside, but then there's going to be volume on the downside. So you just have to be careful about that. Anyway. What else did I want to say? I was talking a lot. The dollar, yeah, I talked about the dollar a little bit. I really want to short it, but not quite yet. I guess we're all waiting for the inflation print this week, USDJPY. See if that keeps going higher. Then that's going to give the Fed hawks and basically everybody, even cash carry, they're going to give them the ammunition they need to remain hawkish. So
and hey, good morning, Stelios. And you're talking about
everything.
Well, everything, but and good morning, Dale and Ryan.
Hey,
and I want to get I want to hear you guys' opinions here. We have the Fed chairman Powell. He's going to get renominated, and he's going to keep his job and blah blah blah. But he's speaking tomorrow, and I think we've really got to be paying attention to what he says. Right? I mean, he's gonna set the pace for. I mean, if he feels that the market is getting too, aggressive in their their expectations of what they think the Fed will do, this is his opportunity to pare back those expectations, right? Because all I keep hearing from everybody, like whether it's FinTwit or interviews that I listen to, anybody who's like monitoring the Fed thinks that we are peak Fed hawkishness right now, which, agree, disagree. I kind of agree with you, Stelios. I think they're trying to get as much done as possible before, we have another, not necessarily black swan event, but something that, that forces their hand a little bit. I think they want to get themselves a little bit of a cushion or a little bit of a buffer here. So
that's a great point, Blake. So part of their urgency is to bring rates up in case they have to go the other way again.
Yeah,
they can't do it
rates
from zero.
They first of all, you got to taper the QE that we're doing right now, and then you got to start raising rates and doing it, and then also think about, hey, the markets have rallied quite substantially since, post COVID. I mean, you look at where the markets are at right now, and they're just starting. I mean, we're in any type of correction, we're at the tip of the iceberg right now. If we really start to correct, right? If there's any substantial correction, and even in a 20% standard, before we get into a bear market correction, what are we, just a few percent off the high? So, I'm not, I'm just saying that if the Fed really wants to set the pace here, they are going to do it he can do it tomorrow. So what do you guys think about that?
Yeah,
actually, one of the to your comment before, one of the Fed members, I can't remember who it was, actually explicitly said that we're going to move faster this time than 2018. Because remember what they did in 2018? They started slowly, and then they they had to reverse. So this time it looks like they really, really want to get pushing. Sorry, that was for your comment before about how quickly they're going to be moving.
Yeah, and then again, you think about like what the S&P is 3.5% off the highs 4%, 3%.
Yeah.
So, I mean, you know, I know a lot of people, myself included, you know, like to gauge the market, the Fed sentiment is really off of, you know, equities. You know, I mean, yes, they have to worry, you know, full employment and, you know, price stability and, you know, but I think stock market optimism, which is in essence, you know, consumer confidence, if you will, to a greater extent. So, you know, stock markets being higher is helping sentiment across the board. So that's like, you know, but when you're, you know, just corrected 3% off of a, you know, 100% rally over the last, you know, year and a half, I'm sure they're like, yeah, that's fine. But, you know, it's not a huge concern as of right now.
I think you can bet that the Fed, as long as the equity markets are not collapsing, you know, we're down 5% from the peak or whatever.
Sure.
I think as long as the equity markets are kind of trading sideways or maybe a little bit lower, they're going to keep going. They're going to keep going as much as they can, because really that's, you know, inflation check, really high, employment check, dropping fast, you know, unemployment rate lower now on Friday, participation rate higher. They're seeing everything they need to see in order to be tightening. The main worry is the markets. So as long as the markets are not panicking, I think they're going to just keep going.
Yeah. Okay. What do you think, Ryan?
Yeah, I'm going to agree with Dale. You know, one of the big things about every central bank is that they need to get some of them interest rate or monetary policy margin for the next time the poo hits the fan. You know, the Fed did that really well last time. You know, they got rates up. Bank of England did to a lesser extent. ECB kept their heads up their asses. Hence why they find themselves in a difficult position now. You've got to, whatever happens, you've got to get that policy margin. So it's important that they get rates up. Whether the market gets a bit panicky that they're trying to go so fast compared to last time in terms of ending QE and rolling off the balance sheet and all that, the market might get a little bit worried. You know, why is the Fed suddenly going really fast when last time they took it easy? But that's one of those things you have to see in time, whether that gets into the market thinking. But yeah, to Powell tomorrow, you know, what can he say? You know, is he going to give us more details? Is he just going to waffle on the same old stuff that we know already? You know, it's always a risk, these things, and we'll have to watch carefully. I'm not sure if we get the testimony out early, like we do with the you know, the semi-annual testimonies he does, or whether it gets released at the same time. I think sometimes we might get this early.
No, I don't. I think this is you know, him in front of the Senate committee.
It's like the old Humphrey Hawkins guys.
It's the Committee on Banking, Housing and Urban Affairs in the US Senate. So it's
I don't think. Well, I don't know if he's going to have a speech. There's definitely going to be Q&A.
It's testimony. So he puts forward if it follows every other one, he puts forward a statement, doesn't he? Because that's testimony when you make testimony. And then
I guess he will put out a speech. He'll have an initial speech, and then he's going to be obviously.
Yeah, I'm just saying. So for the usual stuff, we usually get that out earlier than the actual testimony time. So we might get the comments well before the actual event itself.
Yeah, it's possible.
What's he going to say?
It is.
Good morning, everybody. It's Powell and Brainard's nomination hearing. So I guess they will set out their lines, and in between them trying to be beautiful, I trust they will set out their policy lines.
Brainard's on Thursday, by the way.
So we might get to hear something indeed.
Brainard's Thursday, by the way.
Wait, what's Thursday?
So we got tomorrow and Thursday.
Tomorrow's Powell, Thursday is Brainard. That's according to the Fed calendar I'm looking at now.
Got it. Yeah, and you're absolutely right, K-Man. You know, as far as their nomination hearings, that's what, you know, I talked about it over the week ahead video this weekend. It's just, the question is there going to be a speech ahead of it? I'm not sure. I can't remember, to be honest. Like I try to think back, like every time there's these hearings, and especially, you know, Powell, this is not he's being renominated. So I don't know if he's putting together a speech. I don't know what the protocol is. Do you guys remember? Like I don't remember. That's why I'm asking.
Yeah, well, that's what I say. Usually when he does his semi-annual testimonies and the Humphrey Hawkins and all that, the testimony is a speech he does, and then he gets questioned on it. And that usually comes out the day before or earlier in that day. I don't know if this is the case with this. There will be a speech because that's what a testimony is. Whether we get it the day before or we get it later today or we get it an hour before the event tomorrow, I don't know. But,
well, as K-Man said, it's a hearing, so, is it before a hearing, does he put out a speech? I know you said testimony, but I think it's a hearing. I believe it's a hearing because even though he's been nominated by President Biden to continue on as Fed chair, there are still people in whether it's the Senate Banking Committee or what doesn't matter what chamber they're in, there are people that now oppose him for whatever reason. Now he's probably going to get the nod because he's probably going to get the nod because I'm sure the Biden team, as politicians as they are, they figured he was going to go through without any issue, right? But he's still out there trying to sell himself for this nomination.
Yeah, well, I mean, we might be arguing around the houses. I'm looking at the Fed page and it says testimony, Chairman J.H. Powell at the nomination hearing. As traders, we'll just be ready. If we get some comments out today, early tomorrow, then we'll know he's got some testimony.
It's just my, jaded outlook on the world that.
Oh God, Dale, I'm going to go.
No, that he wanted to get, Biden and him talked and said, get it over with quickly, whatever you have to do. So it's not, and the Fed doesn't want to be a big factor in the election. They don't want to be tightening in the fall. So, they want to get it out of the way. And I think that's just, my conspiratorial it's practical. It's not even a conspiracy. It's just practical to get it out of the way so you're not a factor in the election.
Maybe Powell gave Biden some of his trade positions so he could front run them before he gets back in.
Yeah, well, why are they still buying MBS if they're tapering bond purchases? I mean, the real estate market doesn't need any more help. They're still buying as many MBSs. Anyway, I don't know.
Yeah, well, look, I do believe he's going to be facing a lot of questions. A lot of people are going to be questioning what he's done over the last few years because of post COVID and rates this low and all the different programs, and he's going to face a lot of scrutiny. So he's going to be really being on defense.
Yeah, he's a dangerous man. Remember,
what's that?
Elizabeth Warren said he was a dangerous man.
Yeah, I mean, look, I actually think the Fed chair did a great job, for making sure the world didn't crumble. Now, do you agree with all the programs that they've put in place and how long they've kept rates where they are? No, I do think that they need to be aggressively, raising rates and tightening policy right now while they can clamp down on insurance. I mean, on insurance. I just said insurance, inflation, and insurance too. Damn it. While they're at it, I'm just kidding.
Yeah, I'm all for it. Clamp down on insurance.
but really starting to talk about, he should be more aggressive at this stage, which they are, and the market is obviously factoring that in. I don't see any reason for him to actually change his tune right now, but if he wants to, this is where he can. That's the point I'm trying to make is, if he wants to change how the market, the market is, how many rate hikes are the market pricing in 2022 now? 3, 4?
Between 3 and 4, yeah.
Yeah. So I mean, if he's looking at that going, okay, well, this is what, Bloomberg interest rate expectations are expecting me based on all the economists out there. And I honestly think they're way off base right now. This is his opportunity to correct that. And he'll use it as an opportunity to correct it. But I don't believe he will. I actually believe he's not going to. But he is going to be on the defensive. And so he's going to talk about what a wonderful job he's done, him and the Fed have done to, throughout this situation, and as he should. I mean, he's going to be out there selling himself. So, well, let me point out a few. Gosh, we've talked a lot about just the Fed here. It's my fault. I'll take blame for that.
It's leading all the markets, so it's not a bad thing.
It is. We do have some other things. Some other things that are coming in this week, like CPI, which is going to be important. We got some retail sales. But I wanted to point out the S&P. We are actually at the 618 retracement of the last move higher. You guys know from, if you watched the week ahead video that I put out last week, or put out on Sunday or this weekend, we had a bearish engulfing candle. You guys saw bearish engulfing and false breakout with the daily candle. And as I drew for you over the weekend, I feel that we're going to have some follow through today, and we should be selling rallies, in the S&P, at least for today. Going into tomorrow, it's going to be a little bit trickier, obviously, with the Fed. Today is one of those days that, and if you think about like how we deal with like turnaround Tuesday and blah, blah, blah. Yeah, we'll probably have some downside follow through today. Tomorrow is Tuesday. We have to be prepared for the Fed to be a little bit more dovish, maybe correct expectations a little bit. And perhaps that gives us an opportunity to buy stocks tomorrow, post Fed, post, Powell, whatchamacallit. But anyway, we have that little false breakout here. That's something that I think you need to take in. You really need to factor into the markets because of its influence everything. I have to also point out really quick Stelios, you brought it up as far as Bitcoin goes. These cryptos look really bearish, and they're trading extremely heavy. And as Stelios pointed out, there's a lot of institutional money in crypto right now, and we had this bearish wedge. If you're a ForexAnalytix subscriber, you've been getting this analysis. This is just comes through the daily basic analysis. Bitcoin bearish wedge breakdown, Ethereum bearish wedge. We're nearing the target there of Ethereum. I mean, and I made a comment on Twitter, I think last week. From Christmas, right here, Christmas holiday. I mean, we're down nearly 30% of price. What asset class does that? I mean, come on, and crypto people are like, it's just 30%. That's a pretty big correction, by anybody's standards. So, as this becomes a more wider spread, wider traded asset class, just keep in mind that, we're seeing some pretty big corrections, which does influence institutions, as Stelios pointed out. Right, Stel? I mean, if an institution's like sitting, they may have a little leverage in Ethereum, and they're using all their risk metrics, but 30% decline in your investment is a 30% decline, no matter how little the investment is when you have a portfolio, right?
It's also the same thing with companies like MicroStrategy, Michael Saylor, who has a huge and very public position in Bitcoin. We all know that his average is about 30K. And people are saying, oh, yeah, this is such a good thing that people are getting into this. Well, this is not, Blake Morrow or Stelios who has some Bitcoin stashed around and he's not going to sell them. He's going to hodl. This is a company. Yeah. They need, if they're going to be.
Don't talk about me like that.
I know. He has a few billion. You have a few billion as well, don't you? But anyway,
don't tell me
that's over 30% right there. That's 50% right there.
Yeah, there you go. So they're going to be, if they need to, they're going to have to sell something, right? So they're not somebody they're not an individual. They're a company. If the poop hits the fan, they're going to need to sell, and that's going to be a big whale selling.
Oh yeah,
they'll sell their kids because they're hodlers.
And you guys got to think these are these and they're selling their kids. That's funny. These are risk assets. Any which way you slice it, Bitcoin, Ethereum, the crypto world, and it's going to weigh on like I said, S&P. I mean, we're 3.5% off the highs right now, all time highs, after 100% move. 127% move off the lows, and even just post-COVID, after a 40% move post-COVID, before COVID even put us in a lockdown. So that you see if risk assets really start to fall, you could see a correction much lower in the S&P. And then on top of it, you got the Fed that's, becoming more hawkish, and that's where the narrative is going, where, you're seeing central banks tighten. So just be careful. You mentioned something about the VIX, Dale, earlier, and I heard it as you started. I was going to grab a cup of coffee, and what did you say about the VIX?
Well, it wasn't doing much. And, a lot of people say, well, maybe that means that this pullback isn't meaningful. But you could look at it the other way, is that there's complacency still, and that it would take more damage and a bigger pop in the VIX before there'd be a low, because there's no fear. You're not seeing a lot of fear with it at 20.
Yeah, you're not. And complacency has been a problem of the markets pretty much, most of this last year. So that is something that we should be monitoring. And I think any spike up, you get above 30, and then, you better be watching any type of long, quote unquote, long risk trades that you have. And by the way, I just want to say, if you guys have not taken advantage of the pricing, I know we've already got a lot of people that have taken advantage of it from this weekend, which is great, because we only do this once a year. We offer these like, you get an annual subscription and we have a lot of people that have been in our community now as light subscribers that have been listening to our webinars that we do intraday, for all the ForexAnalytix subscribers. They want to be in our chat room. I had a lot of people take advantage of the pricing. Make sure you do that. This is the time to do it. If you've been listening to us for a long time and you're like, hey, I want to be part of that. Look, this is a good example of our community. This is, our general chat room. That's not including, this is when I got up this morning.
I would say this, Blake, that anytime, I would say of all the people
right
here
there.
are at the webinar, aren't there times after F.A.C.E. you wish you could ask Blake something, or ask Ryan something, or
but he never responds to me. I'm kidding.
I know Ryan doesn't. It's because he doesn't like you.
Yeah.
He sees you as Ryan sees you as competition, like two bald guys going at it.
We're always chatting.
Seriously though, the chat room is just an amazing place. I learn from there every day. It's just an amazing place.
It's awesome. So
I would expect you would have made more progress by now than still. I'm kidding.
All right.
And I want to thank you guys for being here this morning. Just remember, we do this every day. You guys come in, and this is our free webinar, where myself, Ryan, Stelios, K-Man, sometimes Steve, if he's around, Dale, we all like to give our ideas about what's happening in the markets. Then we have, Paulie comes in here. He was in here last week, right here in the free webinar. Greg Horvat, and we love to see you here. So just remember, we're here every day at this time, same bat channel. For those of you guys that are older than 50 years old that can remember Batman on TV. All right. And for
that's just that, wasn't it?
Adam West.
That was just Dale.
I was Batman.
Hey, and have a wonderful Dale. Have a wonderful interview with Giles. I love Giles. He's a lot of fun, and he's a great guy to have on. So
yeah, he's prepped for this team. So we'll move forward with Giles. Thank you, team, and
cheers,
thanks,
guys.
Dale.
You could see all these guys in about 45 minutes on the Morning Edge. Giles, welcome back to F.A.C.E. How are you, my trading warrior brother?
I'm doing great, Dale. Really nice to be here with you all. So really looking forward to the session. You doing okay?
Yeah, doing great. Another year. Another year we're all a little bit wiser, and really looking forward to your presentation today and what you're thinking with what's been happening with a little bit of a different direction with risk over especially really all in a week last week. And I know you even wanted to mention what you think is happening in China. So
Yeah.
why don't you just take it away, Giles?
Oh, Dale, you're a star. Please do jump in with any questions you want to as I go along. I mean, the things I really wanted to look at was, first of all, I really wanted to look at gold. Now, I think gold's really interesting because you can see that it has 2 months of the year where it has really strong seasonal patterns. You can see here in August and January.
We're right now we're just seeing the F.A.C.E banner on the screen.
Okay, let me just.
You may have to do a new share to get your charts.
Is that
there? You go. Got it.
Great.
Okay.
I use this resource by Seasonax, and basically it's very good at looking at seasonal trends. And you can just see, everyone knows that January and August tend to be strong months for gold because of the demand for weddings, particularly in India around the summertime, and the demand for physical gold around the Chinese Lunar New Year. So if you I like to drill down to this. So I've already taken a long in gold and taken profit because I didn't have the conviction to carry on holding. And I'll just run through that sort of nice seasonal pattern. If you see, like from about 20th of December, you start to see the pattern develop.
Yes.
And then it goes through around the middle of February. And
a lot of highs have happened in February, according to my memory.
That's what kind of the stats kind of really show. If you a little bit further on, you just take it there. You can just see, look, in the last 25 years, you've got 18 gains and annualized return of over 30%. So that strong trend for gold is there, and it's always one I always look for around the turn of the year because of the strong physical demand from the Chinese Lunar New Year. It's one of the world's largest human migrations, and one of the traditional gifts is to give gold. Obviously, in the Asian world, giving gold is not just a gift, but it's also a store of value.
Yes.
In the West, gold's often seen as decorative. You might have a lower quality gold, but in the Near East, it's a higher quality. So when you're giving that gift, it's almost like an investment for your family. So it takes on sort of more significance.
So has COVID and some of the lockdowns in China, Giles, affected that demand? I know they are shutting down certain cities and ports, and I don't know if they're traveling as much as they normally do during the Lunar New Year.
Well, we saw a report out last week where Chinese officials were advising against long haul travel for the Chinese Lunar New Year. Now, we had some breaking news over the weekend that there's been some Omicron cases found in Tianjin, which is a gateway city to Beijing.
Right.
Now, the concern here is not so much with the Omicron, but the concern is more with China's policy on handling COVID-19. They have a zero-free COVID policy. So in effect, the main concern is if there's a handful of cases in a city, the Chinese authorities can end up shutting down the whole city.
Would the Olympics have something to do with them even being more excessive about control, being less than a month away?
Exactly. With the Winter Olympics at Beijing, Tianjin's that gateway city, they're going to be very nervous. I could see this going one of two ways. So at the moment, they're obviously got that zero-free COVID policy. They don't want to. You're absolutely right, Dale. I think the fact that you've got the Winter Olympics coming, they won't want to mess around with their policy now. But at the beginning of last week, I read a series of reports on Omicron. And each one of those reports, and this is reports from immunologists, who were suggesting that it's definitely significantly milder than the Delta variant. So there was some studies done on Syrian hamsters by, I think, some French scientists, and they said that the Syrian hamster, it's a bad time to be a Syrian hamster, was recovering very well from Omicron compared to the Delta variant. There were some Japanese scientists that did some study of the deep cell tissue within the lungs of those people who underwent procedures, and they found that Omicron was replicating much, much more slowly in the deep lung tissue compared to the Delta variant. And there was also some indication from South Africa that the people who had Omicron and had been double vaccinated had very good antibodies for other COVID variants. So it was just a series of pretty, reassuring reports from the immunologist community. So I do think in time there is a risk here that the Chinese authorities say we're going to allow a certain amount of cases to go unchecked within the community. That's the best scenario for risk. That's the headline that I would like to see that would be great for going long oil, long the risk pairs, if you suddenly saw a reversal of that Chinese policy. So it's a headline worth just sort of logging in the back of our minds that if they do reverse that zero free COVID policy, it should be very positive for risk, because it's an admission and a recognition that the Omicron variant is much less dangerous than the Delta variant. I'm not sure how the Omicron variant is responding to the Sinovac, which is the Chinese vaccine. I haven't read any data on that, Dale, but that's another thing I'd really like to see, is how effective is the Sinovac vaccine against the Omicron variant. That could be another positive risk headline, or negative if it's not, effective at all, or very low efficacy, then that could be negative for risk. So it's a two-way kind of market, but the bottom line is that is impacting gold demand, because I think if I was in China with this Omicron variant, and that you've got the potential to see family, but what do? Do you get that traditional gift, Dale? I'm not sure. You might think, do we wait another year? So I could see that impacting demand, but the real driver, that real headwind for gold, is the move higher in real yields.
There you go.
That's the real problem, and it comes, like everything at the moment, it comes back to the Fed policy. So you can see, I love the technicals on the chart, and I'll look at the real yields in a minute, but you can see like two opposing signals for gold that are virtually identical. So you have here on the monthly chart from June, July, August, you've got a false break of a Harami inside bar, typically a very bullish pattern. You can see here, you now have a very bearish pattern, which is the false break of a Harami inside bar on the November weekly candle. So you've got two opposing sort of price action signals, which to me kind of sums up where gold is. It's a market of indecision at the moment, because
compression really building.
Sorry, Dale?
Compression building on a formation like this.
Yeah, absolutely. We saw that attempt of a break here, just heading into the end of November, December. You see, that was a little symmetrical triangle pattern that was just building here. Do you see that one there? If you just drop down to the weekly chart, you saw that compression, break, and then false break, and now we're seeing that sideways movement. So I think the market wants to go at one direction, and at the moment it is this surge higher in real yields that's the major pressure for gold. Now I'll tell you what I've been using to really get my head around gold this in the last sort of year. It's when I see real yields rising in line with the dollar, that's when I tend to see the best moves in gold. So if you just look here, and if you look at, I'm using the TIPS bond ETF as a proxy for real yields. But when you see real yields rising and the dollar rising, which is in red, then you see gold definitely falling.
Right.
Similarly, when you see real yields falling and the dollar falling, that's when you see gold rising. So what I want to see to get a clear direction in gold, and you can see if we just take off the dollar index, just take off gold, you see it's this surge higher in real yields, which is the near-term pressure on gold. So what I want to see is real yields and the dollar moving in the same direction to get a handle on gold. So if all of a sudden the Fed turned very bearish, Dale, that could be a great opportunity to get into gold for maybe a little bit of upside. And if we saw, the ideal scenario, that China reversed their COVID-free policy, then...
Can I ask you this, Giles? When you look at the dollar in red
Yeah.
After that straight line move it had, and it's been moving sideways since Thanksgiving.
Yeah.
Doesn't that smack more of a consolidation before one more wave to the upside instead of it being a topping type of pattern?
Yeah. This is where I'm at with the dollar, Dale. You look at the end of the fourth quarter. We had expectations that the Fed was going to have to be more aggressive. We've now got the Fed. Remember, last year they had no interest rate hikes till 2024. They're now dot plotting 3 interest rate hikes for this year. They were just Fed fund futures are moving up towards 4. Goldman Sachs saying that they're anticipating 4 and a balanced runoff sheet in July. So that's why the dollar. I haven't been surprised at the dollar sideways, because a lot of that hawkishness has been priced in. Now I'll tell you what I was a bit surprised about. Not surprised with, but I was surprised to not see more dollar strength last week. So I think the fact that we've seen the dollar weakness is because the good news, a lot of the good news has been priced in. So what will take the dollar even higher? Even if they do move to 4 interest rate hikes this year, look at the COT position. And I was looking at this before I came on, and part of my role with Financial Source as a commentary analyst there. Look at the US dollar strength in the large speculators. So there's been a lot of bullishness priced in by large speculators into the US dollar. So some of that positioning may be a little bit stretched, which is why I'm seeing it move sideways despite the expectations with the last Fed minutes being a little bit more hawkish, balance sheet runoff happening quicker than the market expected, et cetera, et cetera. So the moment and also on top of that, if you look at the seasonals, and this is what I found very interesting, this is a great pattern. If you look at the dollar index, and if you look at the look at it over like sort of 51 years, okay? Do you see how at the end of December, Dale, it dropped so low?
Yeah.
And then you have exactly the opposite at the start of the year. You have the dollar index moving higher. Now, my understanding is that's due to taxation reasons in the US, that it's financially advantageous to move US dollars from US companies to daughter companies at the end of the year. And then once you've submitted your accounts and you've pleased the revenue department, then you move the dollars back from your daughter companies back into the US. So that's why I wasn't surprised to see some dollar strength at the start of the year. But I think if there was a reason for more dollar strength, the market would have had it. So the fact that we saw so little dollar strength, I think, was interesting. But of course, I think, as you mentioned before, Dale, at the start of this webinar, is the dollar does see strength in risk-off trading. So if we see some heavy risk-off trading come in, then we could see some dollar upside for that reason, if you see, rather than Fed policy with the old dollar smile theory.
Do you glean anything from the COT in gold? I was reading, I saw a video with Larry Williams. You know who he is, right?
Yeah.
Okay, so Larry says that if you ever see the commercials in gold being hugely net long, that's when you can mortgage your house and buy gold. And some of my mentees, I was talking to them, and they're not there yet. Some of the funds are moving, large specs are moving to net longs, but the commercials, I think, are still not short. Is that correct?
Yeah, no, it's not an area I'm aware of, Dale. It's not something I've looked into, but I'll look into that. That sounds interesting. Often I look at the ETF demand. Yeah. And I'll look
GLD.
I look at the overall demand. Around this time of the year, I've just been using that very simple proxy of the real yields and the dollar. And obviously the expectations for real yields is going to be driving commercials.
Okay. All right. So, interesting. Yeah. Anything else you wanted to talk to us about besides gold and the dollar?
One more pair I think is really interesting, New Zealand dollar yen. Now, first of all, this is a medium-term outlook. And I think medium term, the outlook for New Zealand dollar Japanese yen upside is excellent. Near term, the position is more tricky because of the risk off trading and the bids we see into the yen. If you look at the purple line, that is just the bond yield spread between New Zealand 10-year bonds and Japanese 10-year bonds. And you can see that as the yield spread tracks higher, then so too does the New Zealand dollar Japanese yen. And bond yield spread is a good way of tracking central bank expectations and gives a good kind of shorthand for what markets are expecting between the two currency pairs going forward. So if you look at the moment, you see bond yield spreads are pushing higher, but the price is pushing lower. Now, the Reserve Bank of New Zealand, now this is interesting, because I expected, they are projected at their interest rate meeting before Christmas to raise interest rates to 2.6% by the end of 2023. They're currently at 0.75%. So they have nearly 200 basis points of interest rate hikes to come for New Zealand. Now, this is where it gets interesting, is that I saw one of the asides they made in their last interest rate decision. They did hike, but it was a more bearish hike. But they did say they were a bit concerned about wage pressure.
Oh,
and they could
it's happening everywhere.
Yeah, that's right, Dale. And if you think since then, look at the Bank of England's decision at the end of December.
Yeah, they were
surprised
gutsy.
Markets, with that 15 basis points. And what got them worried? I remember I was speaking to a Reuters journalist about this. It was wages. Because, if you think about it, I read this report, and this is what really sort of experientialized it to me, was when I looked at the perspective from a restaurant manager. And he was saying, look, I want to get my staff back, but in order to get my staff back, I'm having to pay them more. Right. So he's paying them more to come back to work. And they're saying, but now because obviously, it sounds obvious, but because I'm paying them more, I've got to increase my menu prices.
Right.
So I was thinking, yeah, of course, that's going to be the same across all of the United Kingdom. And the Bank of England recognized that and got onto it very quickly, because once inflation hits wages, the whole inflation problem becomes systemized. So it doesn't matter the fact that you've got there because of supply chain issues. The point is that the inflation's here, and it's in the system because it's in the wages. We saw that in the NFP on Friday. Once wages start rising, central banks will be nervous. So this, for me, gives more emphasis to New Zealand dollar yen upside, because I think the next time we have the RBNZ meeting, when you consider they were concerned before people were getting concerned about wages, now that we've had the Bank of England, now we've had the Federal Reserve, now we're having central banks worry about wages, how much more will they be concerned? I think they're going to be even more aggressive when they do have their interest rate meeting. Now, of course, there's a number of different risks, and I haven't got time to go all in the different factors.
So, I mean, are central banks across the world willing to start a pretty severe recession to take away, instead of people being paid higher wages, to make them unemployed again? I'm trying to understand the end game, because if you and I understand that once wages go up, it's pretty difficult to say, well, I'm going to pay you less ever again. So what's their end game? I mean, and commodity prices too, Giles. I mean, you could raise rates 5 times. I don't think it's going to affect the size of bean or corn crops, or whether or not there's going to be enough fertilizer to bring in another. So what do you think the end game is for these central banks tightening now after the horse is out of the barn?
Yeah, well, I think then they're going to have to cut back, aren't they? So I think it's a question of hiking now as quickly as you can, with as little pain as possible, before you decide you have to hold. So is their whole reason to hike now so that they have a cushion to bring them down again if they need be? Dale, I don't see the alternative. I was speaking to a journalist at the LBC and he, in the UK, it's a UK national radio station, and he was saying, he was saying to me, like, we're addicted to debt, and he's saying, when is this going to end? A kind of a little bit of a tone that was sort of saying, we're idiots for taking on so much debt. And what I wanted to say to him, Dale, was, well, look around your studio. do you want to reduce debt? Because if you want to reduce debt, imagine 50% of the people in your studio lose their jobs. How would you feel about cutting back on debt then? So we can't forget the human factor. People won't be able to forget the human factor. So I think the only viable option that I can see that makes sense to me, Dale, is that one of hiking as quickly as you can with as little pain as possible before holding back and giving some kind of relief. That's just my opinion, Dale. That's a little bit of what I want to happen. That doesn't mean it will happen.
I'd like a jubilee.
Yeah.
I mean, there's a little biblical principle that worked for thousands of years. But what do you think about, when we're looking at this, Giles, Kiwi yen? I feel the same way about Aussie yen. I mean, they are cousins, similar.
Yeah, I feel the same way about the Aussie yen. And we did see like a really good move higher in iron ore prices and coal prices. Just
Santa didn't have coal this year. He couldn't afford. Couldn't afford it.
Just see iron ore pushing higher and coal futures pushing higher.
Okay.
So all of that bodes well for us, the Aussie dollar. The only problem with the Aussie dollar, and it impacts New Zealand dollar as well, is obviously
China.
The Omicron risk for China.
Yeah. Well, Giles, another great presentation. Best way for our viewers, listeners to follow your work and stay in touch with you and get in touch with you?
Yeah, there's my blog here at HYCM. That's a good way to get in touch with me. There's my Twitter handle there at Giles Cochran CCA. And I also have my own website at gilescochranfx.com. So you can get in touch with me any of those ways.
Okay. Wow. Nice. Okay, Giles. I really appreciate you coming to talk to us when you're talking to all these big guys, CNBC and Bloomberg, to come in to our little venue and share your well-publicized views. I'm humbled.
Dale, it's my privilege and pleasure to be speaking with you and the team with so many years of experience. The honor is definitely mine, Dale. And so thank you very much for hosting me. I really appreciate my time here. And it's lovely talking with people who have such a great understanding of the markets. It's a very stimulating conversation.
You're the best, buddy. My trading warrior brother and my brother, Giles Coughlin. Follow Giles. As you could tell, he is passionate about these markets, and that's what it takes, because you have to be a hard worker to be on top and in tune with movements and leveraged ideas. So thank you again, Giles, for being with us.
Yeah, thank you, Dale. Speak soon. Bye.
We'll do it again. We'll do it again. I'll talk. I'll DM you later and we'll set it up. Okay.
Yeah, that's great, Dale. Look forward to it already.
All right. Giles Coughlin, everybody. Everyone's saying thank you, Giles. Appreciate it. Thanks for the ideas and discussion.
Oh, thank you.
And everybody, that'll be a wrap for F.A.C.E. You could join the team in 18 minutes on the Morning Edge. You do have to shave now to get in there to the Morning Edge. So use your edge and come in clean shaven. And the team will be breaking down the bias chart and continuation of what we're doing here in F.A.C.E. This is the tip of the iceberg for ForexAnalytix. So remember, don't just count your coins, your bullion coins, or your currency positions. Count your blessings, and we'll see everyone tomorrow for Turnaround Tuesday. Adios.